Hey everyone, this is our second video in a detailed series about credit cards. In the previous video, we introduced these little plastic loan machines and talked about the history behind them. We also spoke about how the $6 trillion behemoth of an industry works, who the main players are, and even understood the flow of a credit card transaction through a simple example. If you haven't seen last week's video, I strongly suggest that you check it out for a more continuous experience. So, now that we know about why there was a need for a credit card, for this week's video, we will talk about the following. What are the benefits of owning these cards? Are there any cons of owning credit cards? And finally, my thoughts on whether or not you should get yourself a credit card. Before we get started on today's video, our word of the day is candor. It means an opinion that is genuine or honest. I believe that it is very hard to get an unbiased opinion on a topic as controversial as credit cards. There is a lot of emotion riding on both sides of the argument, which is why I have prepared this video with loads of research, and my perspectives are offered with plenty of candor. Grab onto your seats, guys, we're getting right into it. Let's make all the credit card companies out there very happy, and we'll talk about why you should own a credit card. What are the pros behind these little plastic loan machines? The first one is credit cards offer universal convenience and acceptance. I love using UPI on apps like Paytm and PhonePe. However, there is no debating that when it comes down to it, there are several times when bank server issues have let me down and put me in a very difficult place. Credit cards, on the other hand, have a 100% acceptance rate. In fact, using credit cards with the Visa or MasterCard branding means that you can go to 99.99% of stores all over the country and purchase whatever you want on credit. And best of all, you don't need to carry cash around. Chargebacks and fraud insurance. These days, everything about us is available on the internet. Coupled with the fact that we seem to be making a new transaction at some new website every month, how can we ensure customer safety in an increasingly digital world? The good news is that the Reserve Bank of India has now shifted the proof of consumer liability on the issuer bank. What does that mean? It means that if you don't get your order, you can ask the credit card company to raise a dispute against the transaction. This is called a chargeback, and it protects us against fraudulent transactions. Credit cards also offer a zero loss card liability in case you lose them. Customers need to report that their card has gone missing within a 24-hour window, and they won't be held liable for any fraudulent transactions. As you can see, these features offer credit card users a layer of protection in case of any fraud or theft. Thirdly, credit cards give you an interest-free loan. When you make a purchase during a credit card building cycle, it is not your money that is spent. In fact, the money belongs to the issuing bank. Credit card companies offer their customers a 50-day interest-free period from the start of their credit card billing cycle. This means that if you saved $30,000 last month by using your credit card and kept it in your savings account, then you'd have made roughly Rs 140 on interest. Candidly speaking, this is definitely not a lot of money, but over time, small sums can add up. Plus, it's free and effortless, isn't it? Think of it as a small reward and move on. Credit score. Another perk of having a credit card with you is that you get to start creating a credit history and can improve your credit score. What is a credit score? It is basically a number between 300 and 900 that gives banks and other financial institutions an idea of your creditworthiness. The higher your credit score, the more creditworthy the applicant. There are several ways for you to start a credit history and thereafter build your credit score. But credit cards are one of the most popular ways out there. If you pay your credit card bills on time, every single month, without missing a single payment, you can easily improve your credit score. Banks and financial institutions look at your credit score as a way to gauge your creditworthiness. People with good credit scores are often considered less risky and can avail education, car and home loans at a much cheaper rate than someone with a low credit score. Rewards and perks. Now we get to the most fun and widely advertised USP of credit cards, their perks and rewards. Most credit cards have a reward system where they offer cashbacks to their customers. These cashbacks can be in the range of 1% to 2.5% on every transaction. Apart from this, companies also offer you rewards for reaching certain spending targets every quarter and every year. Certain cards also give you access to airport lounges. Now, although I'm not the traveling type yet, I've heard many a mythical story about the wonders of these airport lounges and their free food and beverages. All in all, these free perks can be a nice little surprise at the end of the month. Now that we've talked about the good things about credit cards, okay, listen up guys, I'm going to drop some facts now. If you are not paying for the product, then you are the product. I'll repeat that again. If you are not paying for the product, then you are the product. Which is why for this video, in the spirit of candor, we will spend a lot of time understanding the negative impacts that these cards can have on us. The first one is credit cards create the illusion that you have money. Credit cards are a genius invention for financial companies. I mean, how else would they be able to offer all the perks that we covered above? They need to pay for it in some way, right? They often give their holders the illusion of money. Over time, swiping your credit card can actually make you feel like you're spending game money rather than actual currency. Research confirms that people do in fact spend more money, often substantially more money, when they make purchases on a credit card instead of using cash. Why does this happen actually? One reason could be that when you buy something using cash, there is an immediate negative feedback that you get when you see your wallet get empty or your bank balance go down. Whereas with credit cards, you don't get this negative feeling. So what is a workaround for this? Although it doesn't sound very sexy, the answer really is strict budgeting and financial discipline. Only use your credit card for purchases that you know you have the money for. If there is anything you can't afford, do not buy it, especially not on credit. The minimum amount due and high interest rates. To understand the minimum amount due, we need to look at how credit card companies make their money in the first place. The primary source of income is from fees levied on merchants for transactions. Every time you use a credit card to make a purchase, there is a fee levied on the retailer where you buy your goods. This is called the merchant fee and it can work out to almost 2% of your transaction's value. These charges are generally built into the cost of the product itself, so you won't even be able to see the fees you're paying. The second and even bigger portion of a credit card company's income comes from their interest charges. So like we covered earlier, credit cards encourage spending by creating an illusion of money. By offering you an interest-free loan, the credit card company is hoping that you spend money that you don't have. The goal is to induce a habit for spending that gets customers to rack up debt that they can't pay off at the end of the month. And this is when they tell you about the minimum amount due. What exactly is this minimum amount due? Say that you have a bill of 35,000 rupees at the end of the month. Your credit card company will generously give you an option to pay just 5% of that bill and pay the remaining 95% of the loan at a later stage. But what a lot of people don't realize is that this remaining 95% is being charged interest at exorbitant rates, which brings us to the second half of this issue, which is credit card interest rates. Any guesses what the interest of a credit card loan is? You can mention in the comments below if you do. A regular home loan is roughly around 9% per annum. Taking an education loan can cost you around 9 to 12%, but a credit card loan can work out roughly between 35 and 45% per annum. These kind of rates are disastrous and it is one of the worst ways to be losing your hard-earned money. People who end up paying credit card interest on their credit card debt are actually responsible for subsidizing the freebies and rewards that responsible credit card users obtain, which is why it is always important to remember, only spend the money that you have. Remember that if you are not paying for the product, then you are the product. There is no such thing as a free meal. Credit cards can destroy your credit score. It's ironic, right? You get a credit card to improve your credit score, but if you are late for even a single payment, your credit score can be destroyed. Credit bureaus don't like it when customers default on their loans, which is why on-time payments can have a very high impact on your credit score. The best way to avoid late payments on your credit card is to automate this process. For example, HDFC Bank has a simple process to automate your credit card payments. I'm sure that other banks also can offer the same features. Just make sure to select the total amount due option and not the minimum amount due option. So now that we've talked about the pros and cons of credit cards, let's get right into the meaty bits. When should you get a credit card? If you ask your 60-year-old uncle who's all about simplistic living, then you should avoid credit cards like how you avoided your neighbors during the first COVID lockdown. But if you ask your crypto millionaire cousin, the one with 4 startups, she might suggest that you get 3 of them at once. In the end, what I'm trying to say is that all of this really depends on your psyche. Honestly, the best way to find out is to conduct your own little quiz and ask yourself the following questions with complete candor. Question 1. Do you manage your finances on your own and trust your ability to make responsible purchases? Question 2. Are you prone to the temptation of impulse buying? Remember that the money received on credit is not your own. It needs to be paid back at some point. Question 3. Do you want to get a credit card because you're planning on building a credit history? Question 4. Do you plan on traveling and working abroad? If after a lot of careful evaluation you do decide to go and get a credit card, promise yourself that you will always pay your credit card bills in time and never use any of the EMI or minimum amount due features offered by the credit card company. Mistakes like just paying the minimum amount due can end up being very costly. Please don't make them. And with that, we come to the end of our second video about credit cards. With our world becoming more and more digital, it is hard to envision a society where people do not use these plastic loan machines. Having said that, the goal of this video was neither to promote nor discourage the use of credit cards. In fact, I have one and close to 80% of my monthly transactions are routed through it. The goal of this video was instead to raise awareness about the use of these cards as well as the psychological effects they can have on us. For our next week's video, we will actually dive deep into how to read a credit card statement and also understand all the nuances involved in understanding these bills. If you want to be updated when that video is out, don't forget to smash that subscribe button and hit the bell to turn on notifications. I hope that you really enjoyed this edition of Filter Coffee Finance. If you did, please do like and share. It is a small step that goes a long way in helping us make useful personal finance videos for all of you. If you like the content that you found here, check out my other videos on investing and finance as well. Remember, if there's any specific topic out there that you'd like to see in the future, please do let me know. As always, we are open to any tips and suggestions that you might have in mind. Keep smiling, and until we meet again, this is Filter Coffee Finance signing off.